So let's go back to like here, for example. Let's just get all this out of the way, and this is the original. If we go back to here, for example, and we say take it to there, and then let's maybe switch to, I don't know. So 4 hour, it's beautiful. 4 hour move. I've talked about this, and I'll continue to stress this point and reiterate. So, as with all the pairs, as with everything, when we get a clearly defined move like here, we had one, and then it consolidated, and then it went up. And what was really great about this right here is that this is a 4 hour time frame, so higher time frame, big range, and it's gone and retested that area, and then it completely failed and rejected. So at this point, this is where we are interested in getting involved right here. You know, in terms of supply and demand, and people talking about support and resistance, whether they use fibs or not. You know, even as a secondary confluence, you are right there, and you're identifying that this has got some support here, but it's not in line with anything really. It's just a double bottom. So if this is going to go up, it can launch itself quite nicely from here, and it can go long. And that's understandable, and that's like, okay, so this journey hasn't finished to the upside. This still has the potential to, you know, it's trying to go up. It still has the potential to go up. Maybe it'll make a new high, so in line with the next major fib, which is there. But then looking at all the yen pairs, and looking at everything kind of struggling and curling over and whatnot, this is just failing. It's failing right here. And when it did that, you were there, you know, you were looking at it and you were going, I want to get involved. So at that point, when it starts breaking, you need to make a conscious effort to get involved. You need to be fearless, and you need to put a proper stop loss in. So your first trade, or the first option, is to do something like that, and your stop loss is not going to be, you know, it doesn't have to be huge. You've got two choices with it. You can do something like, because it's sinking, you can do something like that. You can go and drill down to, like, I don't know, a 15-minute chart, and you could do something like this and just measure the pullback to 38.2. You know, again, you could do that. You could go to like a 15-minute chart and really scrutinize this price action up here, and really look at it and say, okay, it's made a clear move here. So the question now, straight away, this is bringing my attention to what is going on. I'm going to ask the question: is this the start of the sell-off? Is this what we've been waiting for? So you're there, right, and you're looking at it, and at any point you're getting in here, you're going to preempt it. No, you want to see it break this level, and then you get involved. So you get involved, and you know already that your stop loss is likely to be at the highs, or maybe just above the highs. And so if you're looking at this, you could say, okay, at 50, let's pull this up. You know, this is huge. So you're getting in a trade. It's done this. It's done this. It's done a little move here, down here. So maybe you're when you're looking at it 6 o'clock in the morning, or 7 o'clock your time, 8 o'clock here, or 8 o'clock your time. You know, this is on the 9th of September. You know, we've had the whole thing go down. So from here, is it going to launch itself back up? So you could even go so far as to, and then this is what you do: you send it to me, because then you can question it and say, look, I'm not sure exactly where I should put my stop loss, but it definitely doesn't go on the bloody fib, which I've seen people do. Yeah. And I'm like, why are you putting your stop loss on the fib? It's going to go up, tap the fib, and then fall over. That's what you're counting on it to do. So you don't put your stop loss on the fucking fib. You put your stop loss above it.
Yeah, this is what I was doing.
I know, but people do it. People do it automatically. They're just like, you know, they don't really think about it. Like, yeah, about there. And, you know, nice small stop. That's all good. Yeah, done. Okay, beautiful. But no, it needs to go above. And this is where we really understand, and that's why I shared. It's a simple way of monitoring the price action. I coined it, I nicknamed it, what did I call it? A 3-option rule. And it's just simply about understanding and measuring the pullback. So we're basically applying the fibs, and we're going to go, right, it's pulling back. Okay, it's pulling back. Is it going to get all the way up here? Let's put a stop loss up out the way anyway. Let's safeguard it. So again, another mistake that I noticed people made, they were doing this because they don't want to put big stops in, but then it stops them out once, how many times? 2, 3 times before it eventually goes, and sometimes they end up missing the whole move, sells off without them because they got stopped out too many times here. So it's like, get stop loss right, get it right in the first place. So if we're thinking this is weak and it's had a chance and it's made a decent move and it's making, it's done the pullback, I could argue that my stop loss could go somewhere like that, and we can look at it on a 5-minute chart, 15-minute chart, just to really explore this price action. Let's go back to an hour just to have a look at it. We don't drown out the noise, and quite simply, all we are looking to do is T1 is going to be to 38.2. And that's what I keep saying to people. Make sure, if you're in up here, it means you've preempted the move. And what people are scared of is they're not fearless enough. They want it to get down to here and break here and continue. But you see what proceeded to happen. And this is where the problems arise. Is that we didn't, we didn't get clean price action. After, you see it on a 4-hour, it was absolutely spot on. It was peaceful. It was lovely. Higher time frame. Trickled beautifully. We got stop loss in line with the pullback, the first little pullback. So instantly, when it drops into profit, what do? We're doing that. We're locking in that profit. We're taking some off. We're locking in when it hits. Done. Because then what happens? We want it just to break on down, and we want it to go to the 764 without any drama. And we're sitting here around 130. We see 129.60 is the first target, and then 128.60 is the next target. Another 100 pips, and it's all very straightforward, and it seems really nice. And you got all this right up until this point. Now, if you didn't get in here and you missed all this, and it's doing that, then don't anticipate it just breaking. Anticipate if it pulls back, then you're getting on the pullback again. What are we going to do? Yeah. We're just going to apply the 3-option rule here. We're going to look at the high time frame, and we're going to see. We're going to go like that, and we're going to stretch that, and we're going to do. We're going to have to do it again. We're going to have to say, right, same principle, same thinking. Look at this, where it's broken down from. Look at that pullback, significant pullback. So where's our stop loss going to be? Right, well, in this case, we're going to wait for a pullback, but I'm anticipating a stop loss to be somewhere like that. And that ties in quite nicely with the 50%. There's the last swing. I might be a little bit more aggressive and confident and think, this is going to go down. But again, we need to just allow for a pullback, apply the 3-option rule. So then stop loss might end up here above the 50%. So, let's see what happens. This is where patience needs to come in, because you and everyone else get ahead of themselves and think, all right, it's going down. Yeah, it's going down. Let's get involved. And then they get involved at the wrong entry, and then they immediately in drawdown. And it all works out. By the end of the week, Friday, it's hit target, happy days. But at the start of the week, you're sitting there and you're going, it's like bollocks. What have I done here? Got in too soon. And then you put your stop loss in a stupid place where a fib is, and you get stopped out before. Now, where the stop loss is where you should have the entry. That should be the perfect entry point where the stop loss is. And there's a saying about that where you've got some famous traders. They are, I can't remember his name. One of them said the same thing. Because most people get stopped out where they should be putting their entry. And that's something that you should make a note of and keeps you solid, and that will hopefully help you steer you in the right direction, because that's all that needs to happen. It's little tweaks, and it's like, okay, you've got these strategies, you understand the price action, you know what to expect. Now the hard part seems to be trying to monetize it. All that information, trying to monetize it. You know what's going to happen. Now you want to make money from that move. So look, we've got this lovely bounce off the 382. And it's just working. It's absolutely playing out to perfection. And there, it's testing. It's now testing the 382. So 130 is a nice round number. Let's see what it does. Okay, look at that. It did a big spike up. Why? Because it wanted to stop everybody out. So, okay, we're not in yet. So we're not going to go in yet. But here, the 50. Now it's done a big spike up. I'm anticipating looking for a sell off that 50. And I might put something like a stop loss above the 618. Or be generous still and say, okay, I'm going to scale in. I'm going to take one here. If it holds and starts curling over, I'm going to put a position here and short it. Next position I'm going to add, if it was to go up to these other fibs, I might put one on here and I might put one on here. So I'm going to put small risk on here and then scale in and add to this position if it can get up. If I feel like it, believe the process. Where's my cutoff point? Well, somewhere up here. And so, that's how we have to do it. And it's not an exact science sometimes, but more often than not, because we are patient, we allow price like hour by hour at least to start developing. and we've allowed for the pullback. This is where your mind should be screaming at you, telling you to get involved. Start getting involved, start making some money, start shorting it up here, not down here, not where the support is, but up here. Why? Because you apply that 3-option rule, it's done a perfect setup. If you didn't catch your first move to the 382 as a T1, by which point you probably would have been stopped out, but already made some money. And then the beautiful thing, like going back to that pound yen I was talking about, so you make some money on that first move down, then it pulls back. And we're going to get involved again, maybe the next day, shorten it back down. This time we're going to take it to there, again have another go at the T1, but also hold for that T2, have another stab at it, and make some more money, and then probably find we get stopped out again. And then eventually, by Friday, we've probably taken this trade repeated, rinse and repeat, multiple times. We've probably done it once, twice, 3 times, 4 times, just one pair, taking 3 or 4 trades across a week, 3 or 4 days, until it gets to target, by which time you'll have made 10%. And you won't even, you won't have even come out first gear because you'll have timed everything to perfection. There's that little bit, there's that little shift in mindset. Just needs to happen. In terms of an exact science, it's not an exact science, but look here, all I'm doing is I'm waited patiently. We've got something like that going on. Okay, I'm in, I'm shorting. My stop loss is just going to go here now, because I'm thinking we're trading off the 50% fib, and I'm in around a 50, so my stop loss is going to go down. When it drops down like that, I'm going to go ahead and put some fresh fibs on and plan this journey down to 382 first off. All right, it's done that. I'm going to move my stop loss. Safeguard. Might take some off here as well. Let's see if it can break. If it can break down, happy days. We're good to go. But I'm measuring and managing the risk and the stop loss based on what the price is doing on my at my fib levels. Reaction here, great. If it reacts here, again, I'm just going to move the stop loss. That's it. That's all I'm doing. I'm only managing based on primary fibs. Everything else is secondary confluence. So, but the direction, I'm not looking at any longs. I'm not taking any longs. One of the guys said to me he wanted to go long on the bounces. And I'm like, yeah, but there's no need. You're being too aggressive. No need for it at all. Why do you need to do that? You don't need to. Just go with the trend. The trend is far better and far healthier. To just because you're gonna get some good money out of this movement, and you're not having to do anything for it. You're not having to work hard for it, because the trend is just gonna do it all for you. So then people trying to call at 50%, trying to take it the other way is all right if the trend is bullish. Then yeah, we're looking at pullbacks. But knowing, like with the Aussie yen, for example, it wasn't a pullback, it was a sell-off, and we're looking for the 764. So you can't start taking longs at 38 or the 50. What you've got to do is use that area as a point of reference and say, is this done? Is this the place where we're going to see a reversal, or is it going to break it and carry on going? At which point, that's what we want anyway, because that's what we're looking for. We are looking for that. We're looking for that continuation. We're looking to capitalise on the entire move. And we have divergence for tops and bottoms, so we do have it. Anyway, look, this is I don't know. This is me just reviewing everything that's been going on all last week, and you're not alone. This happened to a few people, and it wasn't. I wasn't surprised to see. It wasn't a surprise because, to be fair, price action was challenging at times. The movement on it was quite aggressive. It wasn't designed for you to come in and just go short from there to there. That's what you had to do, but you had to endure some swings. So that's why we take some profit and we make sure we capitalise on this movement, which is lovely. I love it. I thought it gave us this euro yen was actually a peach of a move. It was a beautiful currency pair to trade in line with other yen pairs. It really did do a great move. I was absolutely amazed at the clarity and the clean price action that we had. I mean, first little mini target would have been down to 764. So I look forward to seeing your setups over the next few days, and just ping me stuff. What you need to do as a good exercise is share a chart with me when you've got your first thinking. So
Mm-hmm.
instinctive kind of thinking, without you
Yeah.
overthinking anything, without you
Mm-hmm.
overanalyzing it. Send me your first thoughts. Then we know where
Mm-hmm.
your first thoughts are taking you in terms of where you're thinking. You know what is actually going on in your head.
Mm-hmm.
What's your first thought? What's your first
Yeah.
initial impression of what the price action is doing? And so
Mm-hmm.
share that with me before you dilute
Yeah.
it, before you start filtering it, tweaking it. Share it with me because that will give me an incredible insight into how you're perceiving and viewing everything right from the
Mm-hmm.
off. And
Yeah.
if we can drill down, deep dive into how you're seeing things from the very beginning,
Mm-hmm.
then
Yeah.
we can make the tweaks at the very beginning. You know, that's where we need
Yeah,
to.
that's true.
So I want to strip it right back. When you look at a chart, you start looking at something, you see a setup, you think, okay, yeah, this is doing that. Send it to me because often you'll find that
Mm-hmm.
you're probably right with this. You know, in terms of direction and things like that, you're probably right. But it's just then we just need
That's
to.
true. Yeah. Yeah.
I worked with you quite extensively last week, and you can see like with this euro yen, just needed like in terms of getting those sniper entries, in terms of tweaking the entries,
Mm-hmm.
I mean, that's all. That's all we need to do. We need to say, right, is that
Exactly. Yeah.
pullbacks? We want to short this, so we want to short the pullbacks. We don't short. We don't want to sell at the bottom. We want to sell at the top. So it starts doing all of
Yeah.
this, and then we start getting involved. See, like that, there,
Mm-hmm.
clinical is that first candle, for example. That was a clinical move down, where you could have finally got it breaking, and that's when we had it go down at one, get in here to there, pull back, get in again to here as a T1.
Mm-hmm.
Depending on our entry, we might have still been in this, or we might have just been stopped out. And then as it drops, though, we could get in again. You know, or if we are in at the beginning, the good thing is we can leave some skin in the game
Mm-hmm.
right from the start and hold it. But you see
Yeah.
here, it gave you, over a course of
Yeah.
3 or 4 days, it gave you countless opportunities to get in on this move. So this whole thing, I don't
Mm-hmm.
take
To
it.
enter. Yeah.
Most of the time, people say, "Oh yeah, fear of missing out." It's like you don't need to worry about it. You don't need to be fearful of missing out. You're not missing anything. It's going to give you another opportunity. It's like a bus
Mm-hmm.
or like buses. You miss the first bus, the next one will be along the way.
Yeah.
Or if you're looking for a taxi, you know,
True.
there's loads of
That's true.
taxis. You miss the first one. What are you going to do? Stress
Mm-hmm.
because you missed the first one. You know, what are you going to do? Jump in the middle of the road to try and get one out of
Yeah,
desperation.
that's true.
You don't need to. It's just sometimes we just need a bit of common
Exactly.
sense. Patience will pay. So hopefully that gives you some, you know, some ideas of what's what. You already know this. I don't mean to repeat it, but I think it's nice to go over it all.
Yeah, absolutely.
And
That's really helpful. I mean, it's really helpful for me also to